All right, it's still where we shape policy and advance development with our conversation. We're always proud to say that. Now, this segment, it's for the big story and for the big fish in their house. Now, there's something we'll do on Mondays, which is to do global policy update. And we're going to start that from the UK, looking at the latest development as regards the inflation rate, where the governor of Bank of England said that the persistent concerns about inflation is receding. As we speak, the inflation rate is pegged at 2.2%, even though it's a little distance from the target, which is about 2%. But we're going to look at the performance of the UK economy in the last few months. And guess what? We have a special guest here with us in the studio. For the past 1 year, he's been speaking with us virtually, but this is the first time in our studio. He's in Nigeria for a special visit, a special conversation. I have the pleasure of introducing to you. He's a man of many parts. Sometimes it's usually very difficult to introduce him because he has economic background, he has military background. But we're privileged this morning to host the chairman, African International Chamber of Commerce and Industry, Ambassador Wallace Williams, who joins us for the first time in the studio. Glad you have you join us this
Thank
morning.
you very much, Femi. Been looking forward to meeting the
Oh,
team. Where is Blessing? Where is everyone?
Blessing is around,
She's
she's playing a crucial role behind the scene. And
okay.
I'm sure after now, we're going to have a proper meeting with Blessing.
Yes.
The point is, we must acknowledge you for taking time to be here this morning,
Thank you.
to be your busy schedule. Today is a
Yeah.
special day for us.
Thank you.
So let's start. You've been in Nigeria for a few days. Let's start with your visit to Nigeria. I know this is not the first time,
Yeah.
but what has been the experience?
Oh, of course. Nigeria is home. It's welcoming. It's warm. Uh, the people are always gracious. Um, you have quite a number of highly articulated and intelligent people. And what I admire about Nigeria is that they make things happen. They can make things happen. And it is that knowledge base that Nigerians have that are respected around the world. Sometimes for the wrong reasons, but the better reasons are that they provide, a lot of added value to the United States, whether it's doctors, whether it's lawyers, whether it's specialists. Do you know we're now having what is called reverse medical tourism in Nigeria?
Oh my.
A lot of people who are friends of mine, they are coming to Nigeria now for dental care, for heart, and other medical, what I will call fixing of their system.
Even in the wake of this Japa syndrome, which
Yes,
is
so
reigning.
I want to make an appeal to Nigerians: don't japa, re-japa, come back home, because people are seeing the value of Nigeria versus being out there where you are stranded, where some places, like you're beginning to see, you're not welcome. Um, and this is where most people are heading to. People are heading to Africa. If you on a flight, normally, as I've been, you'll see that 70% of the people are non-Nigerians. So what it is they're seeing that we are not seeing. So I would appeal to them, try and look inwards, and let's do local economies, develop them, work together, develop your space, because nobody else will do it for you. And when you go there, what you're doing, you're giving away your knowledge base, to other countries to develop. So we have to stop that. Reach Japa, come back home to Nigeria or Africa, wherever you're from, because other people are seeing the value. Is it the Chinese? Is it the Indians? Is it the Lebanese? Is this even Dubai now? And these places are coming in and buying up land, buying up, farms, etc. And they are making use of our resources more than we are. So we need to, I would say, in the communities, develop community-based I would say units, to look at, a factory in every community, transfer the knowledge. If you're bringing people, they should align with your strategic policy, national strategic policy. If you're coming, this is what our policy are for foreigners. You come, you bring your knowledge, you bring your technology, you share it, we don't mind you making profit, but you enhance the community, not take and go, and then you leave us impoverished.
All
And the
right.
Pan-Africanism is where this is concerned.
That's interesting. If this is coming from you, I'm sure that's viable for people to know that there are
Yes.
more opportunities in Nigeria for people to stay rather
Yes,
than Japan.
absolutely.
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 That's great. Now let's look at the story for the segment, which is to look at what is playing out in the UK as
Hmm.
regards to inflation rate. Now, the Bank of England governor is saying that the risk that has to do with persistent inflation, as far as UK economy is concerned, is receding. You know, it's been pegged at 2.2% as we speak. Now, what do you make of the trends as regards the bid to manage inflation in UK in the last few months? You're aware of the shock this has brought to the world globally,
Yes.
starting from when COVID happened towards the issue of Russia and Ukraine, the impact of that on global economy, which has also affected a lot of even big economies. But in
Hmm.
recent times, you see a lot of economies coming out of the wood now, in the sense that UK in a few months have been able to maintain stability when it comes to the inflation rate. Talk to us now that the inflation rate is at 2.2%. What do you make of
Well,
the
let's look
movement?
first to begin at some of the underlying factors, and which people are not talking about. Brexit. Having left the European Union, right, that is a big shock to the economy. And people have not really looked at that because that was their natural trading near market. That's one. Two, the currency, right? Margaret Thatcher did a very clever thing in that she stayed on the fence when the euro was being launched and said she will keep, watching until they see the stability of the euro and the strength of it, and kept the pound. So those underlying other factors you need to look at what has happened since then. So the Bank of England and the UK economy, they decided, okay, they're going it alone. Now that they're going it alone, they want to make the pound stronger, right? They've lost their near market. They have, and are looking now at the Commonwealth and their ex-colonial powers to trade with, right? The shock absorber is that the economy, and they've had to peg, a lot of the interest rates to keep inflation down because cost of goods, the external debts, etc., they've had to manage very well. And the fact that they kept their pound and was not in the mix with the euro has given them a little bit of a breathing space so they can control the economy. With the 2.2, and looking at receding backwards, they have to ensure that their um, export market, has a viable pound that is not going to impact on the economy. So now the Bank of England has to carefully look, and they're looking at it carefully, that the average British citizen is paying high costs for their goods at the moment, right? And therefore, they need to bring that down to give them a breathing space, right? And to reduce inflation to drive it down to 2% and keep it there. So they're going to re-enter, I think, the near market of Europe. I don't know what the trade agreement will be now going forward. And then, of course, they're already looking at, the other markets outside of Europe. This now would probably help and buffer what they are planning to do. But they also have to look at the kind of taxes that they have been applying to the British citizen. You know, property tax, this tax, this tax. They've got to try and reduce those as well. And I don't know whether this particular Labour government will be, very lenient on the average British citizen to ensure that they bring down those kind of costs to make it easy for the British citizen to not survive, but to feel a sense of relief that they can have a little bit of leeway with the monies that they earn.
Now, let me make reference to a statement credited to the governor of the Bank of England, where he said it's too early to declare victory over inflation, but the risk of persistent inflation appear to be receding. Now, the point is, will you say it's enough to, because if you look at the figure on paper, the annual inflation rate on paper, looking at the reality as regards prices of goods and services, you just talk about, cost of energy and all that. What would you say about the statement credited to him that it's too early to declare victory? If you look at the figure, 2.2% looks viable,
Verbal, yeah.
but he's saying it's too early to declare victory. How do you react to that?
Yeah, the reality of that is that, and you talked about it earlier, the impact of what's happening with Russia and Ukraine, right? That will have a major impact on the economies of all the near countries, Britain included. We don't know what would have. I mean, he was using what I would call double speak, diplomatic speak.
Yeah.
He is not saying, quite openly what are the mitigating factors at the moment. But certainly, China, the BRICS, and also the Ukrainian war, right, with Russia, who is, put it this way, an enemy of the West, and who could damage their economies if, the thing escalates much more and something surprising happens, right? Russia could tomorrow drop a bomb on the Ukraine. Now, that whole thing scatters his 2.2, So that's why he's saying it's too early to declare victory, because there are too many mitigating factors surrounding that, nice managed 2.2, because anything over the next 6 months can affect that. So he's being extremely cautious. And the British, they are very diplomatic in what they say, but their statements are very loaded. He didn't say what he needed or wanted to say, but those who can read between the lines, it is the effect of certain mitigating factors that could all of a sudden blow that out of the water. So he's being cautious.
Now, let's look at the approach to, managing inflation globally. You have big economies adopting this template of cutting interest rate. Now, given the result that UK is recording, will you expect cutting of any rate any soon?
The cutting of rates
Yes,
with
interest
who?
rates.
With the British? Or
Yes. Bank of England. Would you expect it to toe that part soon?
yes, I think they would. I think the Bank of England, when they look at what are the mitigating factors of their own economy, they'll have to say, well, we need to do something to make sure that goods and services can be bought. The cost of energy might have to be brought down. The taxes might have to cut a bit, and so that they can control, the damages that inflation will bring to the country and to the economy. So I believe now is the time for them to have intervention as part of the helping of the economy. They need to have intervention policies, and now I think they will need to sit down with the Chancellor of the Exchequer and sit down and work out, cutting the interest rates to the benefit of the citizens and the country. So yes, I could see them cutting the interest rates again, because as we just said, cost of goods, cost of energy, if it goes, way too high, you can have, instability. I don't want to say riots, but you could have instability
Yeah.
evolving in the country.
Now, what do you make of this development? If you look at what is playing out in the big economies, like the case study we're referring to, the UK,
Mhm.
whereby the approach to taming inflation is to cut interest rate. But if you flip the coin here in Africa, the same template is being adopted, but you have this disparity as regards results. They are recording single digit inflation rate, even
In the
in
UK.
the UK and
Hmm.
other, European countries and other big economies. But here in Africa, it's double inflation rate.
Yes, yeah.
What do you think amount to
The
this disparity in
yeah
results
the
using the
reason
same template but
yeah the
getting
reason
different
is
results?
very 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 simple, Femi. We have high import costs we have currencies that are losing value daily. You cannot go to a single digit if you don't have the ability to control your imports and balance with exports, right? The disparity is you're on the flip side, and that is you are importing more than you're exporting. You have to use foreign currency, foreign exchange to buy. Your currency keeps depleting daily. I'm not even saying annually, daily. So there's no way you can drive it down using the same template to get a single digit inflation. It's impossible. You cannot. You can use the same, you can cut interest rate as much as you can. It is not going to give you the same results because you have two mitigating factors that are going to drive your interest rates up every time you cut it. It's going to go up again because you are having, a losing currency and you are importing more than you're exporting. Simple.
All right, let's look at the impact of, the idea of cutting interest rates on businesses. So many businesses have been affected, and when it comes to borrowing, you understand that the interest rate has an influence on that.
Of course.
For consumers, for investors in the UK, the decision to stabilize the interest rate and peg it in the last few months, what do you think has been the impact of that on businesses and concerns for
You
investors?
see, if you're in business, you have to plan, your profitability. And the only way you can plan your profitability is to have a fixed interest rate that you can work with because you're working around that. And you say, okay, we are going to lend you money. Interest rate is between 2 and 5%, right? You can work with that because you know that you can plan your business knowing that not much is going to change with regards to the fixed interest rate. But if, for example, as we are in Nigeria and Africa generally, and your interest rate is double digit, already you're on a losing scale. But if they give businesses the opportunity to breathe, the opportunity to develop by saying, okay, we want to help our domestic growth of our businesses. Let us fix interest rate in a single digit to allow the businesses to grow. Because what we have to have is buy local, sell local. And you need to know that the impact of energy, especially in Nigeria, is what blows you out of the water. Take, for example, aviation. Aviation cannot exist when you can have fuel prices, on what I'll call a large template. That alone, that's why so many airlines have gone redundant, because the volatility of fuel prices, blows those businesses out of the water and they can't grow. So you need to be able to give local businesses, a fixed single digit rate and peg it for a period of time so that they are allowed to grow and help the economy. And that is where you will also be able to bring inflation down, goods and services, right? And growth of businesses. So government has to make a decision. Wally Edu and the others who I know, they need to make a decision. Are we going to develop growth in the economy? And if we do so, the businesses, the people who are taking the risk adventurers, who are going into business, give them a safety net. The safety net is pegging the interest that you have to pay back on money borrowed or on money, at a single digit rate that is pegged. It could be fixed between, a parameter of 5 to 6 or 5 to 7%. But you know for sure it's not going to go beyond 7%. That way you can plan. You can plan your business, you can plan your development, you can plan your growth, and you know that government is supporting you. And that is what has to happen. We cannot have, businesses being at the vagaries of wild interest rates, which will also continue to cause inflation. The man who's importing, he needs to also know that he has a stable currency. He needs to know that the central bank will give him, money at a fixed rate as well, fixed exchange rate, so that he can do business. He can provide import if he has to, but more importantly, we have to drive export.
All right, let's look at the projection for the year 2024. The projection by Bank of England as regards inflation is to keep it at 2%, and now
Okay.
it's at 2.2%. Now, for the Bank of England to achieve this projection for the year 2024, what are the critical steps or some of the priorities that they should put in place to keep the momentum if possible? And then in the next quarter, the projection is before the end of the year, they achieve the target of 2%. If that is going to be viable, going to be realistic, what are some of the critical areas you think the Bank of England should focus on when it comes to its monetary policies?
Well, the Bank of England, to maintain that, they have to ensure that when they fix the rates, they maintain it, right? That is important. Then, secondly, they're going to look at what we just talked about, helping local businesses to grow. Same thing, it's the same template for Nigeria or wherever, right? When they do that, businesses, now have fixed interest rates, which is nice. I mean, that single digit and how low that interest rate is giving room for growth, right? So the critical factors for them is to maintain those policies, make sure they're implemented, then they apply it to the economy and to businesses that will grow because of this. Critical factors is that they have to work with the government, right? The Chancellor of the Exchequer, and say, okay, let's look at other areas, critical areas, that you can provide some interventionist policy, whether it's reduction in the taxes, whether it's reduction in some of the energy costs, the things that fuel growth. And those are the things that they have to do. They must work hand in hand with the Chancellor of the Exchequer, because they now have to make the announcements of this is where we are going, this is what we have decided, this is what we'll implement, and we're backed up by government as well.
All right. We're not done yet. We're still looking at global policy for today. But it's time for us to go on a short break. When we return, we'll continue our conversation with our special guests. Stay with us.
Join us on Supers every day by 4 p.m. as we explore the heartbeat of the world's most compelling stories. Don't miss Supers on Sup News Television. Tune in and stay ahead of the curve. Early exchange, shaping policy, advancing development.
All right, if you're just joining us, you're the right place at the right time. Let me let you know, we've been talking about the latest development in the UK, talking about the inflation rate, which is pegged at 2.2%. The target for this year is to ensure that the inflation rate is pegged at 2%. Would you consider that to be a success or victory? Well, according to the governor of the Bank of England, it is still no victory yet, but that's the call for duty as regards that bank. We still have a special guest here with us, Mr. Wallace, who is doing justice to this kind of conversation. Glad to have you here with us.
Thank you very much. A pleasure to see you and a
All
pleasure
right.
to meet the team.
You know, we started the global policy update from the UK. Before we get to the US, let's see what example Nigeria could draw from the bid to managing inflation in the UK. Now, looking at the success that UK has recorded in the last few months, now they've achieved single-digit inflation rate.
Mm-hmm.
What lessons are there for Nigeria as a country or Africa? What are the lessons you think they can adopt when it comes to approach to tackling inflation? And what are the peculiarities as regards our economy in Africa that should be imbibed to some of our monetary policies rather than lifting the template from IMF, from other climes? What are some of the peculiarities? You've toured around the African continent, and I'm happy you're doing a project in that regard. What are some of the peculiarities that Africa should adopt into its template to managing inflation?
Well, first begin, Africa should have an African central bank.
Yeah,
Yes,
you've been talking about this for
yes,
years.
yes. They should have an African central bank. That's one. Two, their individual countries have debts hanging over them from IMF, World Bank, China, etc. They should not be the ones to sign debt derivatives for their individual countries. The African Union should be the one to do that. And that is a policy that has to change globally for the continent. How did the European Union and the Euro evolve? The European Union, what they did is they got together, crashed the currencies which were all hyper. Was it the lira? Was it the Italian monetary system, the Greek, etc.? And they now patterned, right, a euro monetary system, right? And then evolved a euro currency. Those is what helps stabilize the European Union and the European continent, if you want to call it that. So Africa, if they have to take a template, take it from the euro. And that is, let's have an African central bank. Let's have our own payment settlement system. Let the African Union be the signatory to any loans and debts to the individual nations. I don't want to call them countries because that was arbitrarily drawn by the Berlin Conference. So what we need is for African Union to take its rightful place and be proactive. Tell the rest of the African countries, nations, and the states, look, we will sign for loans prioritized and agreed to by the African Union and yourselves, whether it's for infrastructure, whether it's for agriculture, whether it's for education, and we sign on your behalf. So we take the debt burden off for you. Because if we don't do that, Femi, what we are going to keep having is that all individual countries, whether to try to lift a model from the US or from the UK, will be struggling to survive, economically. Something has to change radically on the continent. And that is crush all these currencies. Is it how many? 40 something currencies we have in Africa at the moment? And each of them, each individual currency, is struggling with the foreign exchange that they have to source for import, with the foreign exchange they have to source to trade. So those are the two critical factors that has to be looked at. And Europe and the US and the UK don't have that problem. They don't really have a strong currency. And as I said earlier on, Margaret Thatcher stayed on the bench, or rather on the wall, and kept the pound so that it also strengthened their economy. They did not fall into the European euro. However, the euro accommodated all the rest of the other European countries. So we have to think the same way. If a template has to be raised, let's raise the template of the euro. Let's raise the template of the European Union, signing on behalf of the other countries. Let's have like a European Central Bank. Let's have an African Central Bank. I mean, it's a no-brainer that if we don't do that, there's nothing that we can say about having a template from the UK or the US, individual countries. It's not going to work. It's not going to work because we will be pushing a boulder up a hill continuously, and as much as we would like to, and that is to adopt what the UK is doing, we can never at this point in time reach single digit figures for running the economies of the various countries that we have in Africa.
Interesting. Now, away from what is playing out in the UK, let's look at the US economy, where inflation is, as at July, it's at 2.9%, according to statistics released by Bureau of Labor Statistics. Now, let's do like a comparison between the two ends. You have that of the UK at 2.2%, that of the US 2.9%. Talk to us. What do you think is so peculiar about the approach to managing inflation in the US that could be a little bit different from that of the UK. Looking at the trend of things in the last few months, the latest figures, with us as at July is 2.9%. What's your take on that? Give us a picture of the background to this development in the US.
Right. Is it positive or negative? Which one are you looking at for the US?
Let's bring both now so
Yeah.
that at least we can balance the conversation.
All right. Okay. So negatively, you have the war in Ukraine and America's interference, in I would say country matters. So that will be affecting them. China, has had a major impact on what is happening in the UK, in the US rather, because they are pulling out a lot of their own bonds and financial instruments in the US. So that's affecting them on the inflation side. Positively, the dollar, which has been fluctuating weaker, gives them a little leeway to import and easier for people to buy from abroad because the dollar is more attractive for purchasing. They have to, a lot of the companies that went to China, for example, to use cheap labor, found that the Chinese took all their technology with backward integration and then said, we don't need you anymore. So they have to come back home. They no longer have cheap labor, right? And so the Chinese have been hitting them very badly with that, right? Positively, that dollar, when it's weak, gives them, a breathing space. And that breathing space is that they can now, export more. And that being able to export more gives them the ability to positively fight inflation. So I've given you a balance between the negative and positivity of what is happening there. They will also try to drive the inflation down as much as possible. So they will eventually have to accept that the dollar will have to get weaker. Then the other mitigating factor, which is about to come, is BRICS, right? When BRICS is launched in October, then you will have a major impact on the dollar. Now, the positive side of that is that they now have competition and therefore they'll have to adjust their currency as a basket of currencies now coming. No longer, the senior currency, that you must have the dollar. You now have a basket currency. So they'll have to adjust. And in adjusting, positively, by coincidence, they will now be able to have, yes, a weaker dollar, but more people will be able to import their goods and services. So let's see what's going to happen come October. They have to look visionarily ahead to the consequences of interference in other countries and their war efforts, and then also on the Chinese impact on their economy.
All right, let's look at what the Federal Reserve in the US has
I
done.
was just about to talk about that.
So now that we're there, so let's talk about it. They've kept the interest rate consistent, between 5% and 7% for months. But now the chairman of the Federal Reserve is indicating that it's time to do, if I may quote him, saying policy adjustment. You're aware there's a meeting that's to take place in September. Now, would you expect, given the results as regards inflation rate, a kind of policy adjustment that you has talked about, which means cutting rates to some investors who are expecting that, yes, this is the best time to cut interest rate? Would you expect that as the Federal Reserve will hold its meeting in September?
Right. First begin, let's look at the background. The Federal Reserve Bank is not government owned, as you know. This is an individual institution who pulls, percentages out of the air, right? They will want to address the economy based on the investors in the United States who are going to be telling them, for us to be profitable, you need to cut the interest rate. And they will, because that is the bloodline of the American economy. The major investors work with the Federal Reserve Bank, and it's a boys' club. So they'll come and talk and say, well, you need to do this for us. Look at what's happening with the dollar coming, with BRICS, etc. And you need to give us, the ability to cut interest rate and make it viable for us as the investors in the economy locally to be able to drive the economy. So absolutely, they are going to cut interest rate. There's no ifs or buts about that.
But if that happens, that's like few months to the election. The US election is taking place in November. And if the meeting happened in September, like you predicted, perhaps if there's going to be a cut in the interest rate, what could be the implication of that on the economy, looking at the few months to election and the peculiarity of humor emerge as the president? You have two contenders now. You have, Kamala Harris, who is also, according to polls, is getting momentum, and you have Trump, that Donald Trump. Now, I want you to paint this picture of what is expected of the Federal Reserve, how conservative they should be in terms of their monetary approach to tackling inflation, knowing fully well it's an election year where you have more of expenses coming from the government quarters and all that. So looking at the time frame, what kind of conservative approach should the Federal Reserve deploy in this so that the impact of the economy could be minimal?
Right. Now, you have to look at whose side they're on in the politics, right? If they give a boost, obviously the political Nostradamus, he's a professor, says that one of the 13 keys for winning an election has to do with the state of the economy at the time of election. So if he's on the side or they are on the side of this current administration, it will give a key away for an election win for the current government, right? If they're on the other side, we are talking politically now as an impact. On the other side, they could very well decide no for the time being and help to push their candidate into power. It's all a power game. So the investment aspect, they may not cut interest rate as much as we expect, depending on which side they're on. But if certainly they're on the side of this current government, right, they will do a nice big slice of a cut on the interest rate to help them over the line. But if not, they may cut interest rate minimally because they are working with the investor community and the economic drivers in the country. And therefore, we will see an interest rate, but what it is the question. How large it is, how big it is, what is the percentage that they will cut. That's the key aspect of what they're going to do in September. It has politics behind it. Who's driving, the politics right now? That's the point.
All right. Let's okay. We go on a short break now for us to continue our conversation. It's the early exchange where we shape policy and advance development with our conversation. That conversation will continue after this short break. Stay with us.
We've got just what you need right here at Femi Wash Media. Call it the Midas touch, and you wouldn't be wrong. Let us record, produce, mix, and master your audio like nobody does. Reach us on our contact today for the best quality job. Early exchange, shaping policy, advancing development.
All right, we're still looking at that big story for this segment, which is the inflation rate in the US, which is pegged at 2.9%, according to statistics released by the Bureau of Labor Statistics in the US. And our special guest is still here with us. Glad to know you're still here with us to share sensitive issues like this.
Absolutely.
This is looking like a reunion, and
yes.
I'm enjoying this moment while it lasts.
I'm absolutely delighted as well.
All right.
Yeah.
So let's look at the role of politics. Like,
Yes.
we're having a conversation behind the scene where
Yeah.
you talked about there are certain issues that go behind the scenes that are
Since.
not so visible.
Yeah.
Now, it's an election year for the US. As someone who has been a player, in the political arena, also being an economic or global affairs analyst, what do you think might play out for the US as regards the persona or the personality of who he emerges as the president of the US in coming months? The influence of that on the economy, one. Then also, how do you see the role of the economy or politics playing out when it comes to economic issues in the US? In which is going to determine or influence who becomes the president. Talk to us, the
Yeah,
relationship
absolutely.
between these two
Absolutely
things.
what you have said there is quite correct, Femi. Behind the scenes, politics pull the strings of who is going to win the election. Politics, finance, and economics. Now, is it that the big boys who are in existence now and who has a role to play and looking forward to big business? Let's say, look, for example, the arms manufacturers. Let's look at the defense industry. Is Trump a warmonger? Is he going to look inwardly to the American economy first, like he has said, America first, or he's going to spend time playing about with international politics, right? That has an effect because if he says no, he's not going to be doing a lot of outside interference, and the war industry and machinery needs that business to keep workers, from the labor point statistics that you talk about, and they are down, right? They say, well, we will switch our allegiance to Kamala, and then the industries working with the Federal Reserve Bank, right, will say, hey, we are going to be boosted by Kamala Harris because she's going to spend more time on foreign policy, which gives us, production and manufacturing. That's how it's going to play out. But if Trump, for example, is smart, he might say yes, he's going to do foreign policy into what's happening with Ukraine and Russia, and so he wins over the heart and minds of the defense industry and the central the Reserve Bank, and Kamala Harris will have to either show that she's more aggressive in that determination. So they are playing out the politics at the moment because those are the things behind the scenes. So politics and finance has a lot to play. They're interacting together, and that will determine, who will be pushed over the line. They at the back will determine who is going to win this game, and that's just an example. The pharmaceuticals, they are also they are a major lobby in the United States politics. So, are they going to get more opportunities, to export and to manufacture? All those are conditioning factors in the politics and the economy. So, September will give you an indication, if you're smart enough to know whose side they are on based on how far they've gone in cutting the interest rate, how large or how small, and then you will have to link it with looking at the policy that is set out by the what you call the gladiators, Trump and Kamala Harris. So after all the rhetoric is done of campaigning, look at the policies. What are the key policies that they say in their manifesto that they are going to adopt? That will give you a clue.
All right, you're aware of the fact that the global economy or the global beast now, the global market is likely dollarized, and there's a bid to de-dollarize the global economy. Now, how do you see the US responding to this move? You have the BRICS coming up with alternative currencies, and they're getting stronger every day in line with what's going to happen in a few months, the launch of whatever they're coming up with. How do you see the US responding to this, and what
The
might likely be the impact of these on the dollar?
Yeah. The US are not going to sit down and allow their dollar to be battered. They are going to go down fighting. So, as I said previously, I think what's going to happen, there's going to be some major cyber warfare taking place with that brick system. And they would have had to guard against that very, very strongly because America wants their dollar to be still the top currency in the world. So they're not going to lay down and roll over. They're not. So I think they are going to fight. They will use every machinery in their armory to ensure that they support the dollar and go against the de-dollarization plans of the rest of the global economy. But, these BRICS nations have worked very hard to ensure that they can have their own competitive currency work. And they would have hopefully crossed all their T's, dotted all their I's, done their better testing, and looked at all the cybersecurity and security issues. But certainly, America will not roll over where their dollar is concerned. And they will continue to use it as a weapon. But they have a major problem in that the petrodollar was the weapon that they used to keep everybody in line around the world. Now, the major oil producers are willing to go with the BRICS. That is something I don't know how they are going to tackle that. It's going to be extremely difficult. Are they going to continue to say to Saudi and the other oil producing nations, we are going to give you more arms and armaments and give you, literally a free ride to maintain the petrodollar? That is the question. Right now, the petrodollar is the dominant currency and it is under attack because some people who are oil producing nations said they're pulling out and they're going to use, the BRICS currency. They'll use the yuan, they'll use the Russian ruble. And don't forget, Russia also has major energy sources as well. So when you collate that together with, the other oil producing nations who will join BRICS, because we said there's 159 countries, and a lot of them in there are oil producing countries, you see that the petrodollar will be weakened, and they will have to do some sort of propping up with those countries. I don't know what they'll give to them in exchange or how they'll put them back into line, but it's going to be extremely difficult for them to maintain the petrodollar. The trading dollar, okay, yeah, competitively, they will still have a strength, but they will, be now competing with an evolved, not an evolving, but an evolved currency, because by the time they get to BRICS, it will have been an evolved currency, and they would have already traded among themselves. And they have a big market. So you say that, 50 to 60% of the world economy is on the BRICS. It's all over for the petrodollar. The trading dollar will be competitive and will probably form a basket of currencies for trade.
All right, before we wrap up, let's take advantage of having you here talk about your constituency now. Let's talk about Antigua and Barbuda, which you're the honorary consul for that. Talk to us. I read about the exploit being made as regards tourism and financial services. The value that island, as small as it is, has added to its GDP. As an authority in this, talk to us. How
Well,
possible?
tourism is on the rise.
Okay.
Most of the cruise ships now and holidaymakers have gone to Antigua because when the hurricanes hit, the two main hubs, which was St. Martin and Puerto Rico, it absolutely obliterated those two countries where they used to have the hub. And so the hub moved more now to Antigua, right? So you've had an increase of cruise ships. They have 6 berths there now, and you've had an increase in tourism, which augurs well for the country. Then we have citizenship by investment, right? So that you become a citizen by investing in about four categories in the country. You know, the National Development Fund, you have the Scholarship Fund, you have real estate, and you have major business manufacturing, etc., that you can invest in and will give you access to citizenship. So in the Caribbean, those who don't have like Trinidad and Tobago oil and gas have to depend on tourism and citizenship by investment. You have Grenada, you have St. Lucia, you have Antigua, and you have St. Kitts. Those are the four main countries that apply citizenship by investment to boost their economy. And so now there are opportunities for gaining more revenue through that route, because a lot of people now need, you know, as global businessmen, they now need a second passport. Most people do not want to be able to wait for a date 6 months down the line, 5, 4, 3 months down the line from the European and US governments who give them a long waiting time and their passports are stuck there. If they have a second passport, then which gives them access to many countries, then you know that's the way that most of them are going. So it's an attractive investment to countries like Antigua and Barbuda.
Now let's talk about the business relations that exists between Nigeria and Antigua, and what do you expect from these two countries to ensure to be able to add value? Looking at the comparative advantages of these two countries, give us a picture of the business relations that exist between these
Well,
two
at the
countries.
moment, the business relationship is looking at how can Nigeria make use of Antigua's free trade zone, for example. I'm giving you an example. At the moment, the Antigua government has a free trade zone with treaties around the world. The treaties with the US through CARICOM, you can access the American market. All right. You have treaties with Europe where you can access the European market. And you also have treaties with Asia, which gives you the ability to access the Asian market. So, from the business aspect, Nigeria companies can go and set up, you know, what I'll call an assembly or CKD, completely knocked down facility. And once they put those parts together of any product, it's now a made in Antigua product. It has access to all these trade avenues. And that's an advantage because that is, you are earning foreign exchange and dollar. You know, of course, it's dollar at the moment. Whether it will be BRICS, I don't know. But that is one. Being a small country, there's not much that Antigua can give other than these facilities. On the flip side, if there are entrepreneurs in Antigua who are looking for a market outside of the 100,000 people there, Nigeria is the place to be because you're talking about 220, 225 million people. So you have an idea, whether it's fintech, whether it's to provide a service or manufacture, you have the advantage of Nigeria being a big market to come and establish business in Nigeria. So from the business relationship, you have the opportunities and citizenship by investment. If you're in tourism, or if you want to build a resort, or you want to build a hotel, then you have an advantage in Antigua. And the Antiguans come here and take advantage of the size and volume of the Nigerian market. That's it.
All right, thank you so much for these, first-hand information about that island and what Nigeria is doing also to get a comparative advantage or maximize the comparative advantage.
Yeah, access to the markets,
Yeah.
US, Asia, Europe, using there as a hub.
Great. I wish we would just continue this conversation on and on, but time is not on our side. But I must thank you so much for your
Thank
time,
you.
creating time out of your busy schedule.
Yeah,
And we hope that the few days you have left in Nigeria will add more value to what
absolutely. I'm
you're
always
doing.
willing to come on.
Thank you so much for your time and
Thank
your
you very
thoughts.
much.
We've been speaking with Ambassador Williams Wallace, who is the chairman African Chambers of International Commerce, and also the Honorary Consul for the island of Antigua and Barbuda has talked about the opportunities. On this note, we'll call it a wrap on your award-winning program, Early Exchange, where we shape policy and advance development with our conversation. Don't forget the conversation continues on our social media platforms. All our social media platforms, Facebook at Souk News TV, and Early Exchange will always return bigger and better. I am Femi Ayodele. Thanks for watching. Market Insight comes up at 11. I'll see you tomorrow.